Okay, welcome to Market Therapy with Dr. Andrew Menaker and myself. I'm John. We're doing it a little bit different this time. I'm keeping the good doctor all to myself today because that's how I roll. I'm very selfish that way. And we are going to be talking about kind of reviewing your psychology for the last year and how to improve some suggestions for your psychology the next year. Going to introduce us now. And this is Dr. Andrew Menaker. Dr. Menaker is a licensed clinical psychologist with a PhD in psychology. He is the boss. More of a stretch than a strength. Since 1995, he's been a performance coach for top money managers and professional traders. And what makes him so important to all of us, other than the man that he is that he's also recognized as an experienced and successful trader himself, and recognized expert in emotion management and intuitive development. You reach out to the good doctor. There's his website and his Twitter handle. And introduce myself. John Hoagland, senior performance coach at Topstep. I prefer middle-aged performance coach, but we are who we are. I've got 38 years of industry experience, 30 years actively traded on the floor of the Mercantile Exchange for 20 years. Come from a long line of traders. My dad was on the floor of the Board of Trade for 40 years. I'm almost at his tenure. That's amazing to me. I did migrate to screen trading in 2009. The opportunities in the pit were dwindling to the point it was that time. I had a number of friends who had attempted to make the change rather unsuccessfully. So I knew that there was an unlearning and a relearning process that I was going to need to take. But since 2011, it's been my pleasure to help traders, talking to traders, thousands of them from around the world, in hoping to improve their performance. And that's what this is all about with the good doctor. Doctor, how are you today?
Doing great, John. But just had myself on mute there for a second. Doing good.
Good. So we're talking about out with the old and in with the new discussion on reviewing your psychology last year and thoughts on continuing to improve this coming year. What are we doing here, Doc?
Well, we're just going to consolidate any kind of gains we made mentally from the year and preparing for new gains going into 2022.
We've got a lot of people watch, and a lot of them are probably wondering if they've made any gains this year.
That's a really good question. Let's start with this. Most people, as I do as well, we think of our P&L as the arbiter of how well we're doing. That's not the only arbiter. It's not the only way to look at it too. Of course, it's why we trade, is to make money. So let's not forget about that, obviously. But I would say this, and this is something that you and I have talked a lot about, John, in the past, and it's a really big deal, is that we have to also look at how much were we staying true to our process. And if you were staying true to your process, then there's some gains, regardless of what your P&L did. Now, maybe your process, maybe your edge is weaker or stronger, or that's a whole nother topic. But that's a really big issue, is how much did I stay true to my strategy, to my plan, that type of thing. And I think that's an important way to evaluate one's trading.
I would certainly agree. I mean, there's always the question that I'm sure many, if not all traders ask themselves, if I could just follow my plan or follow my process, wouldn't I be able to find out if that process actually is profitable?
Mm-hmm. And there's a really good reason why it's so hard for all of us to follow our plan consistently. What happens, John, is, you've been around a long time. I know most people who are listening know this. They may not articulate it this way, which is why I'm going to articulate it this way. But I think one of the big reasons, perhaps maybe the biggest reason why we have trouble following our plan consistently, is because it's uncomfortable. And how is it uncomfortable? Why is it uncomfortable? There'll be times when we make money when we don't follow our plan. And there'll be times when we lose money when we do follow our plan. And in those times, it's really easy to say, forget the plan, F it, I'm doing my own thing. And
Right.
that's why, this is why the struggle will always be there, because we can make money on a poorly thought out trade, on an impulse trade. We can lose money on a well thought trade, on a plan trade. And that's going to happen over and over and over. That'll never end. And that's the challenge is how do you handle emotionally those experiences, which are going to regularly occur in your trading, whether you're successful or not.
It's get comfortable being uncomfortable.
That's it. That's the bottom line. We can put a lot more meat on that bone, but that's the bottom line, is learning to tolerate discomfort. Yeah. In all its various forms. Good structured trade on plan, lost money. Oh, let's jump in and make my money back. Impulse trade. I made money. Got to quickly realize what you just did. You just set yourself up for probably a big give back in your P&L, because you're going to try and do more impulse trades to make more money. And eventually, you know how that story goes.
I probably should have put up a slide with your hierarchy of decision making, because that's so much what you're talking about is the trading in plan. Successful trade, great. Number one, trading in plan, loss. Number two, plan, loss. Number three, out of plan, win, the most damaging trade.
Yeah, that's that's one I had to wrestle with years ago. And I've had a lot of this is one I think a lot of retail traders, probably a lot of people listening, struggle with, is that trade where you were off plan. Usually it's impulse trade or something like that, or got too big or let the loser go too far and it came back. You make money from an off plan trade, a trade that was outside of what you were planning on doing. When you make money on that type of trade, it is basically going to cap your success. Even though you made money and it felt good in the short run, sense of relief, I can pretty much guarantee that you're not going to succeed nearly as well, perhaps at all, if you continue to think that was a good trade.
Well, it has to be, because it was a winner, right?
Yeah. That's the game that trading plays on us, right? Just because you make money, we think it was a good trade, and just because it lost money, we think it was a bad trade. Yeah. And I think it was Mark Douglas who talked about it, and the idea of renaming winning trades and losing trades as productive or unproductive. Which helps me to some degree when I have a planned trade. It's per my plan and I end up losing money on it. It's a loser, but I also have to remind myself, but it was per my plan, so it was unproductive. I try not to think about it as a loser as much as perhaps, well, definitely not as much as I did before I was making money as a trader. I used to think, oh, a loser's a bad trade. It was a kind of a turnaround I've seen for many traders, is when they start to realize that losing trade was, they're not a loser. They didn't do anything wrong. And they start to recognize what happened in that moment of a per plan trade that was a loser, and beginning to accept what happened, literally, really emotionally being okay with it. That's a big turnaround. That represents a developmental milestone for a lot of traders right there.
No, I've known a lot of traders. I've seen a lot of traders, and maybe it's a mind trick or something, but if you take a trade that's in process and doesn't pay you, I've heard trading people in the trading pit say verbally after a losing trade, okay, good.
Yeah, I mean, you can try and do that, and that can help. I think of it as, all right, I just paid for some information, basically.
And that's what he said. I said, you're driving me crazy.
Yeah.
Why are you saying, okay, good after losing trades? He said, because I'm paying for information.
Yeah. Like if I got stopped out on a long, it's like, all right, the information I just paid for was that, there were some more sellers down there, more than I thought. So I had to pay for that information to find out. So I try and remind myself of that really quickly as much as I can. Yeah.
And in that regard, I think it makes it much easier for us to not internalize the loss, and every loss we take, it's like we take a little bite out of ourselves.
It's that hit on our capital, our psychological capital, our emotional well-being, our sense of balance, however you want to think of it. Every time that takes a hit, it's less likely, less probable we're going to trade within plan, less likely that the best parts of us is going to show up, and do what we have to do.
And that's one of the discomforts that I was going to mention, is recognizing that we're in that mind state and being able to stop, to walk away. There's always that what if that creates that discomfort for me. What if the next trade's the one?
Exactly. And I still think that. I still have that thought will never go away, people. It's always going to be there because the market's in constant motion, and there's always somebody who just made money or claimed to make money and you didn't. And so those dynamics will always be there. So you have to recognize that sense, that fear of missing out never goes away. It's continuous.
And do you find, Doctor, we were talking just briefly before, when we have a profit target and price starts to get close to that profit target, do you find that if you start to kind of think, okay, well, we're getting close to this target, maybe it's worth more, we start to get dollar signs in our eyes? I've learned to use that as a kind of a cautionary, like, okay, I'm starting to get greedy, I'm out of this trade.
Oh yeah. As you and I have discussed before, an old tell for me from years ago, and it still happens, is, and I've had clients who've shared this with me as well. When you pull out the calculator and you start looking at, all right, how much is this going to be worth when it hits my target? What will the change in my account be? And it's like, when you do that, all of a sudden, what happens to me is I get locked into confirmation bias, which means I start to discount or deny or not see or information that's not consistent with what I want to see happening. And I start to overemphasize stuff that I see on the screen that is consistent with what I want. And so it gets that confirmation bias situation going. And then what often happens for me, used to happen a lot because I don't do this as much as I used to, still do it sometimes, is very often then for some crazy reason, the trading gods will not give me that target.
Because you scared it away.
Yeah. Yes. And it's not a manipulation conspiracy thing at all. I really think it's there was something going on that I just wasn't able to see. It's when I pull out that calculator, I start thinking about the money, boom, confirmation bias sets right in that moment.
And perhaps there's something in the market that you could have noticed that could have provided a better outcome than.
Yeah, exactly.
Okay, this isn't going to make it. Let's just take it.
Yeah. Yeah. I mean, I look at cross asset stuff, I'm looking at context like, oh, the bonds or the dollar, and or the VIX, I didn't see that. Well, that's why I didn't get to my target. Oh, I wasn't looking at that because I was focused on the amount of money that I was going to make.
Busy working on the calculator.
Right. Exactly. And the dopamine levels are going up, feeling good,
Yeah.
So, yeah.
So a lot of people ask me, Doctor, sometimes, if you're a discretionary trader and you have a plan that's based on market generated information, much like market profile, I mean, it's not a strategy, it's not a plan, it's a context.
Yep.
And
which is how I trade, by the way. I'll say I don't have specific setups, but yeah, go ahead.
Oh, okay. All right. Well,
good. I'm that way as well. It's been years since I've used setups. That was in the very beginning of my trading. So
okay. So is it easier for somebody who's trading that way to bend the rules because they're not so finite?
Rules, boy. So I think of them as here's the thing, John, as you know well, I think when someone's early in their trading career, the rules really need to be rules because it's all about preservation of capital and really learning and trying to survive, and so you can trade the next day, kind of a thing. But then once you start to get a little traction going, and maybe you've been a long-term break-even trader, maybe you're making a little bit of money, at least you're not losing, then I think the rules start to become more like guidelines. But then there's another issue, which we should probably touch on here, is self-trust, because you don't want to just blow through your guidelines and just forget them entirely as well. There's a whole self-trust element as well. But yeah, a discretionary component with understanding market structure, market generated information is what I often see. This is the best hand traders, people are not using a black box or algos. The most successful traders that I see, that's what they're doing, is they're applying a lot of discretion based upon understanding market structure and market generated information.
So I did not know that about you, Doctor.
Oh yeah, I've been that way a long time. I mean, I used to read auction market theory years ago. Met Stedelmeyer a long time ago. He used to live in Marin County, I think, a long time ago, here in the Bay Area. Yeah, no, the old bond traders from a long time ago. Those the old market profile guys. That's when I first learned it many years ago.
Huh.
Many years ago. The old original Mind Over Markets book, which is a great book but hard to read because it bad editing. They needed to get a better editor on that book. There's a lot of typos in that book, but
a lot of people tell me that it is a lot of flipping back.
Hard to read. Yeah, the figures don't line up. This figure, that figure, they get it. But then there's other books that are also since then that are much easier to read that get the same information across. But I read the original, which was hard to get your arms around at the time.
Yeah, I still have my original signed by Jim Dalton.
Yeah.
It's kind of funny. You met Pete Stottlemyre. He was on the floor of the Board of Trade when they were coming up with these theories. And he was talking to my dad about it a lot. And he had some good, like he was one of my dad's go-to guys. Okay, where are the levels today?
Yeah, exactly.
What are we thinking?
And I think of zones instead of even levels these days, only because there's the price action just swings so much. You can't think of an exact, like, 46.87 and a quarter. Well, yeah, well, I'm going to have to give that some room. Same thing with, even more so with the NQ, which I've been trading a lot lately. I think of zones or areas these days.
Yeah, it's 47.82 ish.
Ish is a bit, yeah. And there's a lot of squish in that ish for sure. Yeah.
A lot of squish in that ish. Do you think I did NASDAQ? I can't. It's
a beast, man. That's a beast to get your arms around. You got to have a lot of cushion in your account. You got to be small and be prepared for wild swings and book profits quick on those big moves. And then when it's in your favor, and then be ready to, you got to move quick. It does not move in a linear fashion, the NQ. It is just all over the place.
Yeah, it gives me heart palpitations.
I like it because, over the years, I've done well with my trading in general. So I've been able to build up my account. So I can have some cushion. So that gives me, you need to have cushion if you're going to trade an instrument like NQ. But the movement in it is really, I like it a lot. And it tends to correspond with my overall bias in the market. Yes, I do have a bias. I think all traders have a bias, whether they want to admit it or not. And we should. My bias is that, the tech is kind of where you want to be. And so ultimately, I think more days than not, or more years than not, or more quarters than not, it will go up. Not every day, not every move. But so I tend to have a bit of a long bias, but I also go short. Like one of the things I've been doing in the last year and a half, 2 years, when the micros came on the scene, what I started doing is I'd be long the full size contract, and then I might be, or long or short the full size, and I might be the opposite as a hedge on the micro on a much smaller position, which has been great on an intraday basis because the NQ just goes all over the place.
Yeah.
So I've been doing that a lot. I'll trade the, NQ and the MNQ simultaneously, one long and one short. Love that. Yeah.
All right. Speaking of discomfort, the NASDAQ just makes me uncomfortable.
Yeah, I know. Me too. It does. Yeah, I'm certainly, it's not a smooth ride. That's for sure. Yeah.
All right. Maybe we should talk about a journal. We all say we're going to journal. Do we really?
And if you do, big if, do you read your journal after you write in it? Right. That's the other big thing. I see a lot of people who don't journal, and then people who do, but then they never look at it. So, and then there's also, what do you put in the journal? But yeah.
Well, a lot of kind of stream of consciousness. What are you going to get out of the journal if you're just writing down random thoughts, random things, random feelings during trades, kind of non-specific to any specific trade? Maybe there's a date on it.
Mhm.
But you kind of ramble through the day, and your
Mhm.
hand probably hurts by the end of the day, because I'm a pencil and paper kind of guy.
Mhm. Mhm. Yeah, me
Um,
too. Yeah.
and you can read it at the end of the day when it's all fresh. Do you gain anything from reading the whole year?
I think you do. Here's what you gain. You start to learn about your own internal patterns, your own patterns of thoughts and feelings. As traders, we are really focused on the patterns on the screen, right? The movement, the levels, price moving up and down. Well, there are patterns and levels of supply and demand within us as well, that inner market that I like to talk about. So when you reread what you've written, not just from the day before, but over time, the past few weeks, the past month, past year, you start to recognize, oh my gosh, I have this pattern where when I'm making money, I get too aggressive and too big. And that's right. That's the red flag right before I give all my money back. It's like, well, you need to read your journal to recognize that, to start to see those patterns within yourself.
Do you hear that, traders? You have to write your journal in order to read it.
Yeah. And you got to be honest with what you're putting in there. And the more open you are with just talking about kind of jotting down what you're thinking and feeling, not what you want to be thinking and feeling or what you think you're supposed to be thinking or feeling, but
Just as you're
really,
feeling it.
yeah, exactly. Being honest, not about like, oh, I'm doing this and I should be doing that. It's not about what you should be doing. It's also the other big problem I see in traders' journals, because I get a lot of folks will send them to me. And I'm not saying everyone should send me their journal because I won't have time to look at them all. But the ones that I do look at on occasion, what I often will see is people are just writing down what the market did. And that's not going to help. That's not the kind of journal we're talking about. We're talking about what you did and how you thought, what you were thinking and feeling as you were watching what the market was doing, and as you were watching what your account was doing and what you were doing. So it's not about, well, the market did this and then the market did that, and then the market did this and the market did that. They might stick a little bit in there. Well, I went long here, but the market could, you can talk about what the market did in your journal. I'm not saying you shouldn't, but there should be a much more about what you're doing and what you're thinking and what you're feeling. That's really needs to be a big part of the journal.
And that's something that I do, something that I encourage traders to do, is not just a journal isn't just what the market did and what you did in the market. It's what you thought and felt, and the changes that were occurring inside you, physically, mentally, emotionally, during the trades. Review those at the end of the day. You're going to live through those trades twice. It can't help but shorten your learning curve.
I would go as far as to say this, John, that type of thing, writing a honest journal and rereading it, that type of thing will actually go further to help somebody deal with their psychological issues than going back to trading on sim. I see a lot of people, well, I'm going to try and work out my issues on sim. It's going to be hard to do that because there's no real consequences. You can you can understand markets and price action and strategies and that kind of stuff on sim and a new platform and whatever technology you're using. That the sim has its place, but if you're trying to work out psychological issues, you're going to get way more benefit around what you and I are talking about right now, which is honest journaling about what's going on with you and then rereading it. Way more benefit from that than sim trading.
I would certainly agree. Without that degree of duress, of risk,
Yep.
you don't know how you're going to respond.
Without that discomfort we like to talk about. Yeah, exactly. The real discomfort. Yep.
Now, in the journal, you're gonna find patterns, and you're gonna find things about yourself that you're gonna need to change. That's one of the discomforts that I think is it takes time to make those changes, and sometimes there's pain involved in that.
Oh yeah. I can, years ago, one that I really I knew about, staring at me in the face, but it took me a long time to really finally accept within myself and make the actual behavioral change. And I see this with the number of clients that I've worked with over the years, mostly on the retail side. It's, well, first of all, let me just sort of give some context. I'm a bit of a risk, on the risk curve. I think of people as more of a risk taker or more risk averse, whereas somebody on the risk curve, I tend to be a little bit more on the risky side, risk taker. I've always been a little bit more aggressive just in my life in general, not just as a trader. So that tends to be my default. And so what I had to learn for myself was that an impulse trade that made money, learning that that was actually bad for me took me a long time to finally really learn. But learning that was, I would say, probably one of the most important aspects of my development as a trader. Definitely. But it took a while. And I'm a shrink. So this tells you how hard it is.
Of course. I mean,
and I worked with a lot of people who were doing it as well. And I saw the ups and downs of the whole thing. So it was like, here it is. Can the doctor take his own medicine kind of a thing? Yeah.
well, it would make it just, where am I going here? Isn't it just easier to just do the same thing? To make those changes and to make them stick, it takes muscles.
It takes a lot of it takes the muscles. You have to, like you just said, there's that friction, right? And it's like you're up against resistance, psychological resistance. It's that path of least resistance is just keep doing what you've already done, especially if you've gotten paid for it. If you've gotten paid for it, then it's going to be really hard to let that go.
What about if you haven't gotten paid for it and you still resist making those changes?
Yeah. Well, I would say someone like that, and we all of us have probably been there at some point. They probably have at least one impulse trade where they made money. They probably, and all it takes is really just one experience where you just do something that's completely outside of what you had planned on doing, and then you make money on that. All it takes is just one moment, one instance for your brain to go, oh, I see what can happen here. And so, so somebody maybe have lost a lot of money as a trader, and they know that this is bad for them. And why do they keep doing it? Well, it's probably because they had at least one in there, one of those impulse trades. They probably had several, probably had many, but all it takes is just one, and then they'll keep doing it over and over and over.
It's addictive. It's the hopium.
It's extremely addictive. It's and there's actually a psychological kind of a behavioral kind of a BF Skinner classical operant kind of conditioning explanation for it. And it's called reward scheduling, or it speaks to reward scheduling. Basically what happens is, if you get, and this is just a person and animals, this is something we have in common with animals. They've done this with rats and pigeons and chickens, and as well as people and dogs and cats. If an organism, many mammals respond this way, is rewarded intermittently and randomly around a behavior, that type of behavior is really hard. It's the most difficult behavior to extinguish. In other words, so let's say, you get rewarded, you do a specific target behavior 100 times, but you only get randomly rewarded maybe 7 or 8 times within those 100 instances. And they were random. You don't know when you were going to get rewarded. That you're going to keep doing that, even if it's a bad behavior. Even if you're going to keep doing it. Now, that random variable, I think it's called a random variable intermittent schedule of reward. That's the hardest type of behavior to stop. And this is what happens. So all it takes is just get some occasional moments of making money from an impulse trade. There you go. That's what we're talking about. That's the random variable schedule of reinforcement, which is really tough to break.
Like a gambling addiction.
Yeah. That's the kind of the behavioral, kind of the classic behavioral explanation of a gambling addiction right there. Yeah, there's chemical stuff, biochemical stuff going on as well, but that's the classical behavioral definition of it. Yeah.
Well, I'm just thankful that every time I pick up my phone, I can get that little dose of dopamine.
Yeah. Yep.
You're rewarded every time there.
You are. Yeah. And this is why coming into the market, I was going to say, coming to the market, right? It's so easy. It's like, oh, there's some movement on my screen. Look at that candle. I think I'll jump on that. It's like, right, same thing. Get a little hit of dopamine in the moment. Yep.
Yeah. They do make it. They do make them attractive and flashy, don't they? These trading platforms.
They do. They
Sure.
do. Yeah.
Lots of
Yeah.
little things to. Hey, look at that.
Yep.
Hey,
Yep.
look at that.
Which, another reason why I like to keep my charts pretty simple. I mean, I have a lot of stuff I'm looking at because I like to look at context, and I'm looking at different asset classes and see how they relate to each other. But I try not to have too much stuff on my primary kind of price action screens. I don't want a bunch of bells and whistles.
Too much is just
Mm.
cognitive dissonance.
Totally. Yeah, it's too much. It's too much stuff to process, right? For one. For two, you'll always, it just sets you up for being confused. And then also the confirmation bias is a nice setup in there as well. So you're gonna start focusing on certain things and less on others, and then you're gonna bounce around. And of course, there's always something that seems to be working, that seems to be indicating what's happening. But that one thing you're looking at in that moment is not always going to be consistently accurate. So I've learned that less is more often in trading in terms of what I'm looking at. But again, I look at context. I'm looking at a lot of different asset classes and different time frames, but I don't want a bunch of indicators and a bunch of just stuff flashing at me.
Agreed.
Less is more. Less is generally, and I see this a lot for some of the best traders that I've worked with. When they start layering stuff on top of stuff on their charts, it's usually, yeah, it's usually an act of desperation, or maybe somebody is just maybe not complete desperation, but they're just, well, they're barking up the wrong tree, adding stuff on to their charts generally. Yeah.
Take a couple of things and get really good at them.
Yeah. Yeah. Pretty much there's a saying, and, and I've heard this before and it's somewhat true. It's like everything works. And also at the same time, we could also say nothing works.
Nothing works, right.
And it's all true. And both statements are completely true.
Yeah. I don't even like to use the word works.
Yeah, exactly.
It's like, can't we just find one thing that would work every time?
And we know the answer, you and I, is a big fat no.
No, definitely no.
But there are people out there who want to sell you that.
Yeah. And, when you take that trade and it's a winner, you feel like a genius.
Yeah. And it reinforces,
you had nothing to do with it.
Yeah, exactly. And it reinforces the whole, see, I found my holy grail. Here I am. And you'll stick with it until it doesn't work anymore. And then for some people, they end up, not some, but many people, most people will actually give everything back that they gained in the run up of that experience. Mm-hmm. and then some, usually give it back, and then more usually.
And then start strategy jumping.
Mm-hmm. Yep.
All right. Doctor, how can I commit to being a better journaler next year?
I give a lot of suggestions around that. And to be honest, I never know what's going to strike a chord with a particular person. We could try, I could make suggestions, things like, well, why don't you reward yourself at the end of the day if you journaled, or have an accountability partner, a trading partner, a spouse, a boyfriend, girlfriend, somebody like that, a friend who asked you, did you do your journaling? There's a lot of different kind of mechanisms, but there's no, just like a indicator or a strategy or anything like that. There's no one thing, there's no one size fits all for sure that's going to work for everybody.
Just commit.
The bottom line for me, what it took for me, and I've seen this with some clients that I've worked with, was just a real commitment, a promise to myself on a level that I had never made it before. And I've seen this with other people because I knew what I had to be doing, because I was telling other people to do this, but I wasn't doing it so much. So when I finally started to realize, all right, this is what I need to be doing for myself, and why am I not doing it? And what's the holdup here? And really looking at that, that was for me, and I've seen that with a few people that I've known, was the moment of truth where it's like, all right, now I know what I really have to do. Now, not everyone is going to respond favorably to that. Some people are going to need more of they're going to need something more than that. So depends. Everyone's different.
Yeah, it's one of the many, disciplines of trading. It's, we all have to do our homework. We all have to collect the mm-hmm. data that we use for our decision making. Mm-hmm, mm-hmm. If we make the journal part of that as mm-hmm. As the homework, as I mean, I wouldn't even think about sitting down and starting to trade without researching what's going on for an hour in the morning. You know, it's you have this pattern, I guess, routine, and it's got to become part of that routine.
Yep.
They say it takes what, 2 hours to start a habit. Start the habit.
Yeah. Start somewhere.
And some habits are a lot harder. All right, thank you, doctor. I got this up here just because it strikes me about what traders think about themselves when things aren't probably going that well, and what they really are. I mean, we are all just a ball of energy and light. You know, this is what we think we are, and what we really are usually two different things.
Yep. You know, here's a nice little exercise I'll put people through who are listening. So looking at your slide here, I can kind of build on it. I do this thing sometimes with some clients. I have them get out a piece of paper, blank piece of paper, and have them draw 3 concentric circles. Kind of looks like a target, a big circle, another circle inside of that, another circle inside of that. The outer circle represents who you want to be seen as, who you pretend you are. That's kind of, you know, the outer, it's our persona. The next circle in is who we are afraid we are, you know, that the fear of not being good enough. That inner circle is who we really truly are, which is just pure potential, actually, a lot of unrealized potential. So I think it kind of, I think of the 3 circles reminds me of kind of what I'm seeing here on your slide.
I like it. Beautiful. And as a proprietary trader, you know, just at the beginning of my career, there were a couple of trading psychologists, more trading therapists, I guess. I don't even know if, I don't even remember if they were actual doctors, but they had some really good suggestions. And, you know, standing in the trading pit, a lot of the decisions you were making were really split second. And being a being of energy, which is basically what we always are. There's thoughts and things that come into your mind, but it's like either they were already there, we just didn't see them, we didn't recognize them. Almost like walking into a dark room and turning on the light. It's as if the light was there, we just couldn't see it. And you know, there with the difficulty in trading and how difficult it is for most, if not all, to maintain positive image like this, what we are, this ball of light. And it can change that quickly, it seems.
It can. You have to be in the, you have to sort of be in the right, I was going to say space, but you have to be in the right kind of, there have to be some conditions to sort of help that happen, help that experience happen.
And, you know, I'm half the time I'm somewhere between what we think and what we are. It seems, you know, we all experience so much of the same experiences when we are involved in trading. You know, there's, nobody's perfect. I've had glimmers of where I felt like I was that in tune with the energy of the market and the universe and all of that, but it doesn't stick around too long.
Exactly. And maybe you were in tune for that period of time, right? And then something knocked you off sides. You were not in tune. It's really similar to the experience of, you know, back in my old sports days when I was an athlete or surfing or talking with coaches that I know who work with elite athletes and being in flow or in the moment of being in the zone. It never lasts forever. But, you know, when you're in it, you know, it's wonderful, but recognize it won't last forever. But that's really true. Those are really important moments to
usually lasts for me until I realize I'm in it, and then it's over.
Yeah, that's that, and then try to make it better or increase it, or when you start thinking about it, that's usually when we pop right out of it.
It's kind of like humility. If you if you say you're humble, you're no longer humble.
Exactly. Yep. Exactly. Yep. Yep.
So, a lot of what we're talking about is developing the self-trust. And this is a slide that we used earlier in, our discussions. And I just thought I'd put it up there. We don't have to go through all of this, but, just some suggestions on trying to build that self-trust. And I think one of the most important and the top on this list is developing self-talk, the inner dialogue that is conducive to being a healthy person.
It's a great list we have here. And I just want to highlight one thing just to sort of put an asterisk on it, which is trusting your intuition, kind of that third from the bottom one on the slide. The asterisk is this: you have to first be able to recognize your intuition versus fears and hopes. A lot of impulses. And I'm just going to say that you need to have some experience under your belt in that. And usually, for the most part, of course, can always be some exception out there, but for the most part, people who've struggled with trading, who have not become successful for at least 6 months or a year, even some success for at least 6 months or a year, where you're in a positive P&L, I would tell that person to not be using their intuition. Your intuition is something you can learn to use, but it has to come with some experience, because you won't know it's your intuition. Hindsight bias gets confused with intuition all the time. Oh, market's up here at price. I knew it was going to get there. See, I predicted it. No, you didn't. That's called hindsight bias. So people need to recognize what intuition is. And so I'll just say, yeah, it's important to trust it, but that's generally for somebody who's going to be a little bit more experienced and kind of knows where they're at as a trader.
Well, that experience, I think, is what it takes to even begin to be able to decipher the difference between an impulse and intuition. I mean, they come at you so much the same way, it seems.
They do. There are some differences. And quite frankly, this is one of the big areas that I work on a lot of with professional traders. This is actually why a lot of them come to me specifically. Got a bit sort of my reputation in their circles, is that helping them to be able to distinguish the difference between pure emotion and their intuition. That's a really big part of the work that I do with a lot of those types of traders.
Is impulse, I like to sometimes call it like a spidey sense, a chill, a educated urge, where impulse is basically fear and emotionally based.
It's more or less. I will add that usually, now not always the case, but for the most part, intuition tends to be quieter than emotion. If you're getting the urge, the temptation, the thought, something to do something, and if it's coming at you really loud and intense, this urge, I'm going to say that it's not for sure, but it's probably less likely that that's intuition. Now, it could be intuition. For example, there's different types of intuition. Firefighters, law enforcement, military, those people in those situations, their intuition can come fast, but not always. In trading, what I often will see in another endeavor similar to trading is intuition. It tends to be quieter. It doesn't usually stand out. It's more of like a whisper that kind of keeps coming back. Not always the case, but it often is. And it often comes very quickly and we don't notice it.
That's genius. Intuition is quieter than impulse. It makes perfect sense.
Generally it is, for the most part. But again, there are exceptions, specifically around certain contexts. Like a firefighter looking at a burning building and deciding whether they should run in to save the person or not. They're going to have a quick hit on that, and it's going to be a strong hit. And it's often right because they're an experienced person. They've recognized, they've seen fires, and they know, they have a sense of how much time they have before the thing collapses. They just know. And so that's going to come to them quickly. Different for a trading situation, usually, just to sort of highlight some of the differences.
Yeah, trading is rarely going to be a life or death situation.
Mm-hmm, mm-hmm. Although it can feel like that, right?
Oh, yes.
This
Oh,
is the
yes.
problem, right? We feel it in the moment. It feels like my whole trading career, my life, everything I put into this all rides on this trade or on this day, or this is what happens. Yeah.
Yeah, we can pile everything all into one thing, can't we?
We do a good job of that. Yeah.
Oh. Um, oops. All right. Doctor, I don't know how much time you have left, but um the
A couple more minutes, probably till just before 11 my time here on the West Coast.
okay. All right, wonderful. Where what are you, if you want to get personal that way, what are you looking to change or improve in your trading next year?
Yeah. Let's see. Yeah, I can get a little personal on this. So, as I mentioned earlier, I like to have some cushion in my account. So one of my things I'm going to really work on for myself is make sure that I maintain the cushion that I've been able to recently create for myself and really stick to that cushion. Because that will it helps me to tolerate the discomfort of watching the market do something that in that moment I don't like what it's doing, whether it's because it's going against me or I'm missing out or something. It gives me a lot of helps build my resilience. So I'm going to really, for me, focus on maintaining my cushion, which means I need to manage my size because I can get big when things are going well, get too big on my position sizing. So one of my goals would be to kind of keep my size not down, but just from getting too big so I can keep my cushion in my account. That's one of my personal goals for 2022 because it's worked really well for me this year. And I want to just double down on that.
Thank you for sharing that, Doctor. Yeah, it's always been kind of a fine line for me as to how much of a cushion I need, because too much of a cushion tends to make me a little bit more risky than I usually am, and too small makes me
Yeah,
too skittish.
that's the tough one, right? I've had people in the past. There used to be a lot of discussions, not so much now, but maybe there are in circles I'm not a part of. People talking about how much do you need in your account to trade successfully, specifically like maybe a futures trader or a stock trader. And the argument can be that, well, if you have too much money in there, then that's this money you're going to lose. So you shouldn't have too much in there. Or if you have a small amount, well, you're not going to make it because you're going to be trading scared money and you're going to be over leveraged and you're going to lose it that way. So, and both are correct. Both opinions are right.
Right.
That's the crazy thing about trading.
It is.
You got to find out who you are as a trader. That's the other big thing, right? It took me a while to figure out who I am. Got to learn who you are.
Yes, for sure. Everybody is. There's no right way or personality. There's no right education. It's a matter of experience and taking that experience and learning from it. And it's such a game, because the market is going to do what it's going to do, and there's nothing that's going to happen twice exactly the same way. And if you get the right answers, the market's going to change the questions. And there's so many paradoxes, like, if you're here to make the money, it's going to be hard for you to do.
Very much so. Very much so. Yep. It's the hardest easy money we can make.
No doubt about it.
Sometimes it just feels too easy, and that's the problem.
And when it's going that well and it's that easy, and I know personally, once I start to get that, well, we used to call it a God complex, like we thought we controlled the market. Now I know I'm at risk.
Yeah, exactly. Like I have a few tells for myself when I know that I'm kind of getting into that zone where I'm getting over my skis. Yep.
Always stay humble.
Mhm, mhm.
And that's that line again is if you say you're humble, you're not.
Yeah, yeah. Oh, here's another one. I'll share another personal one from my past. I was just occurred to me. It's a good one. I've shared it with a number of people that I've worked with, retail clients. Is years ago, I used to had this habit. It was a bad habit. It took me a while to realize it was a bad habit of sharing with my family at the dinner table that I made money that day from trading,
Oh,
how much money I made. And that was at the time, it felt good. Oh, I get to show off and da, da, da. It turned out to be it was not a good thing, because it would create a couple of bad dynamics. Like every day I'd feel like, oh, I got to do something so I could show what I did and look like my time that I spent in that office over there was worthwhile, and pulling my own weight in the family and da, 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 all that kind of stuff.
sure.
So expectations. And so finally I had the conversation with my wife some years ago about, honey, I can't, if you don't hear me talking about how much money I made or whatever I did in my trading, that's actually a good thing. And she said, well, maybe I shouldn't ask then either. And I said, yeah, probably not a good idea to ask. And so that was a really important development for me in my trading, was to not kind of carry my P&L around with me throughout the day, later in
Mm,
the day,
mm.
especially with the family kind of stuff. That became, especially if it was a good P&L, it was so tempting to do that, but it was a bad setup. It was a bad psychological setup for me. You'd usually mean within days or within a day, be a very short period of time, I'd have a big drawdown on my hands.
Fascinating. It reminds me on the trading floor,
Mm-hmm.
nobody ever made money there. Nobody talked about it.
Mm-hmm.
You heard about the losing days,
Mm-hmm. Mm-hmm.
but
Yeah.
they didn't talk about the winning days.
Yep. 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 It's that humility we often speak of, and I often see this. Traders who are bold and brag a lot. I just look at that and I just hold my breath. It's like, oh, when is their big drawdown going to come? The more consistent the traders that I've seen who've done really well and just sock the money away and really change their life from trading, they tend to be much more humble.
And that's what we're going to try and be.
Mm-hmm.
Humble and stacking money away.
Mm-hmm. Exactly.
All right. Doctor, it's been a heck of a year. Another heck of a year coming.
I think so. 2022, the big year.
Another dad wisdom. Tough times don't last. Tough people do.
Mm-hmm.
I miss being able to call him after the trading day because he always had these things. It seemed like he was waiting for me.
Mm-hmm. Mm-hmm. Yeah. Yep. Yep.
And we'll call this here, Doctor. Thank you again so much for the entire
Sure.
year of everything you've contributed for us. Hoping you have just a wonderful holiday season and new year, and
Mm-hmm.
look forward to talking to you again next year.
Sounds good, John. I appreciate it.
Blessings to you, Doctor. Blessings to your family. God bless us all.
Yes, and let's all try and stay humble.
Yes.
Yeah. All
Thank
right.
you, Doctor.
Take care, John.